Yo, what's good, guys? Welcome to the chart for the British pound New Zealand dollar. Today I'm going to be going over why I took a short trade on GN this week. I took two positions actually and netted almost 900 pips in total. However, given the time I actually took the trade off, it was more like 600 in total. Still an amazing trade. It took place over the course of less than a day, which is amazing. As you can see, it's been a crazy volatile market. So, 500 pips, 1,000 pips, honestly, is not super uncommon, which is insane. So, if you're new here, if you are not, then kind of know how this goes. What I like to do in my analysis is to look at sort of a naked chart and just go over the fundamental side of things first before looking into the technicals and looking for a trade to see if they sort of match up. So, starting off with the British pound, fundamentally it's been fairly weak over the course of the last few weeks. Reason number one is everything's just been getting sold because investors, given how crazy the markets have been, are just flocking their money to US dollars. So that's one reason the pound is sold off. Reason number two is the number of coronavirus cases have increased in the UK, which obviously is not a good look. And lastly, the Bank of England has been cutting rates, which, as you may or may not know, cutting rates means, for the most part, a weaker currency. So, for all those reasons, the pound has been selling off, which I was looking to take this thing short, which helped that. However, there was sort of a mixed, how do I put this? I guess mixed results in terms of my fundamental analysis, combining with my bias. So the New Zealand dollar actually is fairly weak at the moment, which a weak New Zealand dollar would mean this thing heads higher. However, I was looking to take this short. So there's a little bit of a rift between the, what I wanted to do technically and with my trade and fundamentally, right? Because they're both weak right now. And you can kind of see that with all the choppiness that's been going on. So given that there was sort of a mixed fundamental view on this pair, this trade was, I would say, 60 to 70% more technical. Using the technical analysis to get in and get out. Because, like I said, it's mixed, but the technicals were looking nice. It was in a nice downtrend, and yeah. So basically, fundamentally, that's what I had. It was sort of mixed at the moment. But then looking at the technicals on the 4-hour chart, this thing was rejecting, and it was sitting right on the 200 moving average, which is a pretty strong, barrier. As you can see, it acts as support and resistance quite nicely. It was acting as support, broke through, now it's acting as resistance. And on top of that, let's draw some trend lines here. Obviously, we have this nice little lower one, which doesn't make it look very good for a short, just because, that's a nice strong level. However, if we draw out, this other trend line here, we can see that the bias is a little more neutral because it was able to finally break this trend line, retest, and head lower. So I'd say the bias was more neutral at this point in time. And just for fun, let's draw that trend line out. Now let's draw out our zones, right? Our key levels. So there's that big zone there. Oh my God. And then we got this area. And then we have this area here. And we can draw out this one as well. So these are the main little zones. So really, I was looking at the 1 hour chart when I was, analyzing this pair and looking to take my trade. So let's head down to the 1 hour. Oops, my bad. All right, so looking at the 1 hour, we can see this thing has been in a downtrend, right? Making lower lows, lower highs. I also, a little pointer here, I'm ignoring this wick for the sake of this analysis because when there's really low liquidity, which this happened on a Friday, at the very end, on Friday of last week, so there's very low liquidity, which of course, as we know, low liquidity causes massive moves because it takes a lot less size to move the market. So for the sake of this analysis, I've just been ignoring this wick because it's just due to low liquidity. So, it's not really an actual price movement, if that makes sense, like where the market wants to head. It was just sort of a function of, where the market was at on that Friday afternoon. So I saw this was in a downtrend on the 1 hour, right, making lower lows and lower highs. So I used this Fib channel to see if it could be useful in trying to find a trade. So I just drew out a channel here, and it seemed to work out quite nicely, right? Price reacted to this third little quadrant and the second quadrant, and then this middle sort of regression line. So it seemed like this could be a useful tool in trying to find a short entry. So I just kept it there, and I haven't really touched on Fib channels too much. So real quick, I'm just going to go over. They're very useful in a consistent trend. And of course, you need to find a trend that sort of respects them, because some trends don't, and so there's really no use for it. So you kind of have to play around with it and test and see if it can be used in certain scenarios. In this case, it just so happened that we could use it because price likes to react to these levels in this particular trend. So that's when it's useful. You can use it to add on positions. Yeah, really that's why it's useful, is to add on positions. And that's what I was looking to do. So I was looking at it here. I was trying to find a short, somewhere in this area. And we ended up getting an opportunity here. It seemed to be rejecting off of this third little quadrant. On top of that, if you can see this 100 moving average, it was also rejecting off of that. So nice confluence. And last little bit of confluence, if we draw a fib from this low, as I said, I'm ignoring this little wick, to this previous high here, this little wick. As you can see, it was rejecting off of this 38.2. By the way, this little wick here, I wouldn't count it as a high. It just to me looks like it's a part of this move lower. So that's why instead of choosing this high, I chose this high. And it was rejecting off this 38.2 level, which is the last little bit of confluence, to take my short position here. And given the volatility, as you can see, hundreds of pips are very common in the matter of a few hours in these volatile markets. So my stop on this trade was a little bit bigger than what it normally would be. My stop was just above this high, this last lower high, over 200 pips. Normally, I would never set a stop that is over like 150 pips, but as I said, given the volatility, I made an exception, and as you will see going forward, that was the right choice. So my take profit was right at this extension level, and also it was right at the bottom of this little wick here. So there's a good amount of liquidity there. So let's just draw out this zone for our TP. And just for the sake of this analysis, because I don't want it to look all cluttered, I'm going to delete this. But yeah, so that's where our stop was. This is where our TP was. And yeah, the reason also I was able to set a TP 200 pips away was because, or sorry, my stop 200 pips away was because my take profit was 400 pips away. So it's still a 2-to-1 risk reward, which is a decent trade. You know, I don't try to have anything less than that. So it ended up working out just fine. You know, these are pretty crazy market conditions we've been in, and so, you know, take profits should be wider, and our stops should also be wider to, you know, avoid getting wicked out of trades that, you know, were good trades. So going forward, I was just waiting for this to drop. Immediately, I was roughly 100 pips in profit, but I was nowhere close to my target, so I was just watching, and this thing reversed the other way, and it just kept on heading higher until we finally broke back below. And I noticed there was like a mini little uptrend forming here, right? So I mapped out this little channel here. And so I wasn't too worried about this since it was just respecting this sort of channel. And I was looking to actually add another position, either, you know, like here or here, depending on how price action was looking. I was trying to add another short before this thing headed lower and finally broke this lower, you know, below the channel. So this thing headed higher, and I saw that we were finally rejecting. We got up here, and I was looking to take another position with, let me just map it out, with a stop right below or right above this last little high, which is again almost 200 pips, and our target was 400 pips. So, you know, like I said, the risk reward was just fine on this trade, even though our stop was quite large. And so let's see what happened next. This thing went straight to our take profit. So it would have been almost 900 pips, you know, given these two positions, each, each netting about 450 pips. However, I didn't have a physical TP order set here. So by the time I got out, which was somewhere around here, it ended up being 600 pips between the two positions, which, you know, I really can't complain. You know, that's a great trade. And, you know, given how quick it was too, you know, it was a pretty good trade. What happened was, the reason this thing spiked down was there was a bit of a flash crash for the pound, which, you know, the markets have just been crazy. There's not really a reason there was a flash crash, because at the time, there wasn't really low liquidity. You know, it was the middle of the week. It was in New York session, just after London. You know, there was no reason that there would be a shortage of liquidity to cause a little bit of a crash. So that's a little bit concerning, you know, just because markets are crazy right now. And the fact that that move happened with a lot of liquidity is, you know, should be concerning. I would say that, you know, we're in some pretty unprecedented times right now in the world and with financial markets. But I'm not complaining. It was a good trade. It was 60 to 70% technical, as I've mentioned before, since the fundamentals were sort of mixed on this trade. And actually, I was asleep, but this would have been a nice, actually, place to add another position, even though it is averaging down. But, you know, I trusted my analysis. I trusted this thing was headed lower. And, you know, and sometimes in trading, you got to trust your gut feeling. And that's what it was telling me. Ended up working out just fine. But, yeah, that would have been a nice place to add. Unfortunately, I was sleeping. So this was another decent entry, good trade, and I think hopefully this just goes to show that, you know, fundamentals are great. They are able to predict market movements quite nice. However, you know, sometimes you gotta know when to use the technicals, and there wasn't much happening fundamentally. I mean, of course, you know, cases of the virus were increasing, but that's about it. and the market was sort of just sort of chilling out on the risk off flows, which has helped, which is the reason this thing pumped higher was risk off, because the New Zealand dollar is a risk on currency, and when things are scary, when things are bad in the world, people sell the New Zealand dollar because it is a risky currency to own. And we just saw sort of a break on that, so that's the reason there was a downtrend. And another reason I was so confident this thing was headed lower is thanks to Elliott wave theory. Now, just a little disclaimer, I don't usually use Elliott wave theory at all in my analysis. However, there are times when it sort of is a little bit clear, and I saw that here. In Elliott wave, there's a wave down, a correction. Of course, this is a new trend since it's been an uptrend. In a new trend, there's a wave down, and then a correction, and then another wave lower, and then a correction, and then there's a fifth wave, and then usually after the fifth wave is when we see a trend change. So what this was looking like for me is a little bit of a correction, and then this thing's headed higher. So I was looking to play the fifth wave down before this thing finally broke through, which is why I didn't feel comfortable holding after this, because I didn't think it was headed much lower. So yeah, for those who aren't familiar with Elliott wave, that's what it is. You're analyzing the different waves within the market to try to predict what's going to happen next. It's quite popular. There's whole traders that purely use this form of analysis to trade. I personally am not the biggest fan of it, but in this case, it helped out. So as we see, what happened next is the trend did break, and this thing shot up. So yeah, and just to show you guys how crazy volatile this market is, within a day, this thing had a 700 pip move up and then a 700 pip move down. So absolutely crazy volatile market. So yeah, I hope you guys are staying safe. Of course, position sizing is everything. Given these huge wicks, sometimes people's stops don't get filled, and that could lead to huge losses. So make sure you're keeping your position size in check. Yes, there's some crazy moves. You can make a lot of money, but you can also lose a lot of money very quickly. So just keep that in mind. I hope you guys are staying safe, washing your hands, and these are great markets to trade, sort of. It's a little bit choppy, but really great moves if you're on the right side of them. I hope you guys are taking advantage. If you're not taking advantage, if you're sort of unsure about where the market's headed, please don't take positions just to take positions, because like I mentioned, you could end up with a couple hundred pip loss, even though you had a stop in place. So just be careful. The market is, I believe, almost closed. It's Friday today, so take the time over the weekend to, relax. Of course, stay inside if you can. Just spend time with family, analyze, reflect, get ready for the week ahead. And yeah, guys, I don't expect next week to be any less crazy. Or really anytime soon. I think the markets will be kind of in a frenzy. So just rolling with the punches. Have a great weekend, guys. I'm also going to try to get another video out tomorrow. What that video is a surprise, so just gotta wait and see. But I will see you guys tomorrow. Have a great day.